Hey, Darren, your dividend yield as of yesterday's closing price was 8.6%. That's an incredibly high dividend. How do you plan to protect that? How do you continue to be able to say that you feel like that is safe?
Well, we have, over the decades, put a lot of priority on maintaining a strong balance sheet. We recognize, like, this industry has its ups and downs. It's a capital-intensive commodity business, so we know we're going to go through cycles, and the way that we have prepared ourselves to manage through those cycles is to maintain a strong balance sheet, and that continues to be the case today. Of course, over the longer term, to maintain that balance sheet, you've got to have projects and invest in advantage projects. So that is a key priority. And of course, a lot of our shareholders are retail shareholders, people who depend on that dividend. So we've been pretty committed to maintaining that and if necessary in the short term, using the balance sheet to support it. But primarily that balance sheet is to support the investments in these industry advantage projects. That is the focus to maintain a very strong foundation for the future.
Just talking about the balance sheet, you were downgraded by S&P to AA stable from AA plus stable. So what do you think about that? How does that impact you, or does it?
Well, the philosophy that we use to manage the balance sheet in our finances has not changed. It's always been there as a tool to leverage in the down cycle, and we're doing that today. If you look at where we're at, our leverage today compared to the broader industry and our peers, still very competitively positioned. And we expect as we go forward, we'll draw on that and use it. And when the upcycle comes, which it will, we know that, the energy is going to continue to grow as populations around the world grow. Certainly been impacted in the short term by the COVID-19, but a recovery is on its way. It's just difficult to tell when it's going to arrive. And so when that comes back, we'll rebuild that capacity. But we've got plenty of capacity, and frankly, that has always underpinned our strategy to make sure that in tough times, we have that available to us.
Darren, in the press release that you put out just a little bit ago, you said that you are expecting that the economy is going to rebound, that there's going to be demand there at the other end of this. And you've talked about that bounce back before, that you expect to see a bounce back in consumer demand when these stay-at-home orders are let up and when people can go kind of back to business as usual. When are you modeling? When do you think that's going to happen? Is that a second quarter, a third quarter, fourth quarter?
Well, I'll tell you, Becky, it's really tough to tell. As you know, I know there's been a lot of experts on your shows and others that have tried to anticipate and predict when that's going to come back. We're obviously very aware of broader predictions, and we take a look at that. But I would say we're building a plan that doesn't depend on a particular recovery curve. The idea is to make sure that we get our spending down, we get as efficient as we can so that we can ride through this and expect then, again, some of these fundamental factors that drive the use of our products, growing economies, people's standards of living improving, those are going to continue to be there and will eventually kick back in, and we need to be ready to meet those demands when that recovery happens.
Joe?
I don't know whether you've seen the president talking about, tomorrow. What's today? I don't even know. It's Tuesday, I think. Anyway, Thursday, I think, is going to be some of this OPEC stuff with Russia and Saudi Arabia. And they keep asking him in these pressers whether the U.S. domestic industry is going to be willing to cut back. And he said already cutting back on production. It's already in the books. And he does, he didn't give an exact answer. Do you think that around the world, 10 to 15 barrels of production, that some type of cut that included even here in the United States, is that possible?
Well, I think, if you look at the challenges the industry is facing now, Joe, it's driven primarily by this drop in demand, the fact that we've lost 20 to 30% of demand here in a very short order. That's a huge transition for the industry to make. And what we're seeing now and over the last month or so is the market responding to that rapid drop in demand. Capacity has to come offline, and there will be economics that drive that and force producers to shut in. There will also be logistics constraints, storage constraints that eventually will, depending on the producer's location, will begin to slow down and potentially force shut-in. So the market will address the shut-in and drive levels down, frankly, because there's no demand for the product, and so eventually you got to stop making it.